Hello, welcome to the Financial Room. I'm your host, Natasha Bridge-Mahon, president of the Bridge Group of Companies and mortgage broker of Mortgage Intelligence. Today's topic, my viewers, is another important one. It's called the cost to break your mortgage. Again, the cost to break your mortgage. Now, mortgages are very important for us to have. They give us the opportunity to be homeowners and, of course, build wealth through our equity of our value of our home. Now, as you get a mortgage and as you sign these documentations, it's very important that you familiar yourself with penalties. A lot of homeowners prematurely sign up with mortgage terms and have to end up breaking their mortgage a lot earlier and face huge and significant penalties that sometimes cause a delay in their financing or put a halt to their financing because their penalties just doesn't make any sense, or it's just too high and all of the money is going towards penalty instead of the purpose of refinancing your home. So what are the things that you have to know about in respect to breaking your mortgage and facing penalties? Well, very, very simple. Most banks charge either 3 months interest, and the 3 months interest is usually accumulated to your mortgage payment, or they charge interest rate differential, which is usually known as IRD. Now, most banks charge interest rate differential based on their posted rates. Some banks actually charge it based on the bond rate. So it's very, very important that you familiar yourself with the type of IRD. Now, the bond rate is actually a lot more expensive than your lender charging it at their 5-year discounted rate or 5-year posted rate. So the bond is more expensive, the 5-year posted rate's in the middle, and the 5-year fully discounted is the best way for IRD calculation. So again, it's very, very important that you understand what penalties and what they mean, so if I may say, and how they're calculated and how it affects your bottom line. It's very, very important that you try to save as much money for you as a homeowner. The more you're able to save, the more you're able to put into your pocket, the more you're able to achieve other financial goals in your life. Now, penalties can cause a lot of heartache and pain for homeowners that sign without reading the fine print. Now, we talked about that in our previous episode, reading the fine print, especially no frills discounted mortgage. But it's also very important that you read the fine print when updating into a new mortgage or getting a new mortgage, and understanding what the prepayment penalties rights are for you and what the rights are for the bank. So ensure that you get the lowest interest IRD calculation possible. Ask your lender, ask your mortgage broker. As a mortgage broker, what we do is we sit down with you and we get you a golden policy mortgage. Not only the lowest interest rate that you deserve and qualify for, but also making sure that you get all the bells and whistles, top prepayment, top exit strategies, low penalty calculations, all of the bells and whistles in terms of transferability and assumability of your mortgage. And all of these things help you save money. So again, beware, read that fine print, be confident, and ask questions. Again, when in doubt, spit it out. Ask your qualified mortgage broker. We're always here for you to answer any questions that you may have. And we encourage you to visit us at our new website, which is www.nbteam.com. That's nbmortgageteam.com. Again, www.nbmortgageteam.com. Toll free is 1-866-553-7467, 1-866-553-7467. Once again, you can always review any of our past episodes on our YouTube channel, or I'm here for you. You can always call me at 1-866-553-7467. Hope you enjoyed this episode. Thank you once again, and see you next time.